Hey everyone, thanks for visiting our site. And Amin and I, by popular demand, decided to put together a quick video for B-lender mortgages to help explain what the differences are, which will ultimately help you make a decision as to whether or not a B-lender mortgage is right for you. And we'll approach this in the simple format of the who, what, where, why, how, so that it's easy for you to understand and follow along as we go. So let's start it off. First and foremost, Amin, if you wouldn't mind explaining, what is a B-lender mortgage?
Absolutely. So a B-lender mortgage is one where you don't necessarily qualify through traditional means, and you require a little bit more flexibility from the lender and their guidelines. For example, when it comes to credit and income, and there might be other things as well.
Right, which leads us into the next important topic, and that would be who is a B-lender mortgage for? And the simple answer is anybody. But let me elaborate on that a little bit as quickly as I can. There's a major misconception in the industry, and that is that a B-lender mortgage is for anybody who has bad credit or for business for self-applicants. And while both of those are true, because both of those do fall in the category of B-lending, a B-lender mortgage really is for anybody. So that could be folks with good credit. It could be folks with bad credit. It could be people who have both high debt ratios or low debt ratios, and it can be for anybody who's employed or anybody who's self-employed. So really, anybody can qualify for a B-lender mortgage. It does not restrict people to just bad credit or self-employed.
So where do you get a B-lender mortgage? And to be honest, the very simple and short answer is through a mortgage broker, such as ourselves. And then when you would get a B-lender mortgage is to typically how it happens is that you go through the traditional means of trying to apply through a bank, and then you realize that you can't qualify for whatever reason, and then you approach a broker, and we go through the steps. So that's the hierarchy of how to go about the application.
And you sort of started to explain when. So the next question is when to get a B-lender mortgage, and really when would be when you've tried the traditional means and it just hasn't worked out for you. Of course, our primary focus is always to try the best type of solution, and that would ultimately lead us to a lending or traditional lending. And if that doesn't work out, then our next option, our alternative option, would be to go through B-lending. But B-lending is never our default option. So when the simplest way to answer that, would be when the traditional financing or A financing fails for whatever reason, then B-lending would be your next best alternative.
So then why? Why would somebody consider a B mortgage if the ideal path is still to go through a traditional A mortgage?
If I was to answer that question in one sentence, it would be because it's a viable option. Let's think about it this way, and maybe you can do this when you're trying to make a decision as to whether or not it's right for you. Ask yourself a couple of questions. First and foremost, ask yourself, is an A-lender mortgage an option for me? If the answer to that question is no, because you've tried and you failed possibly, the next question, or the second question you would ask is, does a B-lender mortgage help achieve the purchase or refinance for me? And if the answer to that second question is yes, then ask yourself why not, right? If it's a viable option, then you should explore it. Now, an example of this logic would be, let's say you're looking for a business loan and you need $50,000 to start a business. And this business is going to help grow your future and your net worth. And you're basically following your dreams with this business. Now, you go to a bank, Bank A, let's call it, and you apply for this business loan of $50,000. They're currently offering 4% on their business loans. And for whatever reason, they reject you. Do you cancel your dreams at that point and forget about the idea of starting your own business? Or do you accept the next bank that's willing to offer you, let's say, an alternative lender, but instead of their rate being 4%, it's 5%, it's 1% higher? Chances are you're not going to scrap your dreams just because of the 1% increase in the interest rate. You're probably going to take that 50,000 at 5%. Now, what's the difference between that type of situation and buying a house? Yes, houses are more expensive, but ultimately, the goal is still the achievement of home ownership and the investment of growing your net worth. So I would say if it's a viable option, you do it. Now, the problem, or at least the problem that I recognize most people are facing, is the difference between relative and absolute thinking. So what a lot of people are doing is they're thinking in relative terms, meaning they are aware that there's rates out there, and it's hard to avoid them because they're advertised so publicly and so frequently. And when you know that there's really good rates out there, but you don't necessarily qualify for them, well, the solution that's in front of you, and let's say this is a B-lender solution, you're now comparing that in relation to something that does exist, but that you don't necessarily qualify for. So that would be relative thinking. And that's probably the wrong way to think about it. A better way to think about it would be to think about it in absolute terms. Under absolute thinking, you have a B-lender mortgage solution in front of you, and it's a standalone solution. A lending is no longer an option, probably because you might not qualify right now. And that's okay. But if you take that and you compare it to what you know other people are getting, then you're not doing yourself any justice. You're only going to hold yourself back. So in absolute thinking, think about B-lending mortgages as a standalone solution. And it's a solution that is short-term and temporary, and you're taking it for a certain amount of time to help you achieve your goals.
Yeah, perfectly said. I mean, you're winning at the end of the day, whether it's A or B. Thank God we do have a B option, because there'd be a lot of households out there that wouldn't have home ownership, like you said, Neil.
Yeah. So we'll sum it up there, but there's so much more to say about B-lending in all honesty. And we could talk about this for days and create an hour video, and you're likely not going to watch it. So what we encourage you to do, if you are interested in B-lending, or if you feel that it's the right type of lending for you, is we welcome those calls. We encourage you to call frequently and ask as many questions as you have to. We'd love to answer it. But more importantly, what we'd like to do is take our knowledge and expertise of B-lending mortgages and apply it to your specific scenario. Your story is unique. You have your own story. You're not like everybody else. Nobody's story is the same. So tell us your story. Let us apply our knowledge to your specific scenario and provide you with the most accurate guidance possible.
Yeah, ask your questions. That's what we're here for.
We look forward to hearing from you guys. Thanks for
Take
watching.
care.